There's nothing like the rush of spotting a future giant before the world catches on. It's about seeing potential where others see risk, and having the courage to act before the crowd. The real magic in investing happens when you find that overlooked company, the one everyone doubts, but you see the future. Most people wait until a company is a household name, buying in when the big gains are gone. The best investors? They dig deep, searching for misunderstood companies that Wall Street ignores. They spot the trends that will reshape industries and invest before the world catches up. It's like discovering a band in a garage before they sell out stadiums. Think about tech giants like Nvidia or Tesla, once doubted, now dominant. The investors who saw past the noise and believed in the vision are the ones celebrating today. They didn't just buy a stock, they invested in a revolution. It's about conviction, not just chasing quick riches. When you find a winner early, you become part of its journey, watching it grow, overcome, and prove doubters wrong. You learn to trust your research and instincts. You're not just a passive investor, you're a partner in success. Today, we'll explore a company that made that journey, and a few others that could be next. This is about more than money. It's about being part of innovation. The thrill is in the discovery, and the reward is in the ride. Let's dive in and see what it takes to spot the next big thing. The journey starts now. Palantir is a textbook case of a misunderstood stock turning into a Wall Street favorite. In early 2023, you could buy Palantir for under $10 a share, while most experts dismissed it as too risky. Critics called its business model confusing and doubted its government contracts. But a few investors saw the bigger picture. Palantir was building a data platform for governments and corporations. They recognized its long-term vision and sticky business model. Once embedded, Palantir was hard to replace. Then the AI boom hit, and suddenly, Palantir's years of groundwork paid off. The company transformed from a niche contractor to an AI powerhouse almost overnight. The stock soared, and what were once seen as weaknesses became strengths. Palantir's story is a lesson. The biggest opportunities are often hidden in plain sight. Market sentiment can flip fast. The ignored underdog can become tomorrow's titan. The key? Do your homework, look beyond headlines, and have patience. Palantir's rise shows the power of visionary investing. It's about seeing value before the world does. The next big winner is out there, waiting for someone to notice. Will you be the one to spot it? So how do you find the next Palantir? That's the million-dollar question. Today, let's spotlight 3 companies trading under $20 a share, each at a turning point, with unique business models and big potential. Meet Palantir, Lightpath Technologies, and Duos Technologies Group. Each is pivoting from old models to new, high-growth strategies, just like Palantir did. They're developing breakthrough tech, landing key contracts, and building foundations for explosive growth. These aren't household names yet, which is exactly why they're interesting. We'll break down what they do, why their tech matters, and what their numbers reveal. Allot is shaking up cybersecurity, Lightpath is redefining infrared optics, and Duos is tackling the data center crunch. Use these as case studies. Look for strong business models, clear paths to profit, and exposure to big trends. Let's start with Allot Palantir. First up, Allot, ticker ALLT, isn't your typical cybersecurity company. Instead of selling to individuals, Allot partners with telecom giants, embedding its security directly into their networks. Millions of subscribers get seamless protection as part of their phone or internet bill. For carriers, it's a new revenue stream. For customers, it's effortless security. This security-as-a-service model is a game-changer. Allot's approach creates a massive, scalable distribution channel. Telecoms do the selling. Allot focuses on innovation. The result? Recurring, predictable revenue as more subscribers sign up. Once a carrier integrates Allot, it's a long-term partnership. Allot recently launched Off-Net Secure, protecting users even on public Wi-Fi, expanding its reach and value. By embedding itself in the telecom ecosystem, Allot is building a sticky, high-margin business. It's not just about selling software, it's about becoming essential infrastructure. This strategy positions Allot for steady, scalable growth. The company is pioneering a new standard in digital security. As threats grow, so does the demand for Allot's solutions. That's why this under-the-radar company deserves a closer look. Let's talk numbers, because results matter. Allot's latest quarter saw revenue jump nearly 14% to $26.4 million. Even more impressive, the company turned profitable ahead of schedule, with net margins over 10%. Its recurring SECaaS business grew 55% year-over-year, now making up 28% of total revenue. Operating expenses dropped as a percentage of revenue, showing real operating leverage. Management raised full-year revenue guidance, signaling confidence in future growth. Deferred revenue, future business already booked, rose 56%, a strong sign of demand. So why is the stock still cheap? Many investors still see Allot as old tech, missing its pivot to high-growth software. Analysts believe Allot is just getting started on its profitability journey. With expanding margins and a scalable model, it's a classic turnaround story. The market hasn't caught on yet, but the numbers say it's time to pay attention. Allot is quietly building momentum. The smart money is watching. Next, LightPath Technologies, ticker LPTH, is at the center of defense and tech innovation. LightPath makes specialty optics and infrared systems, the eyes for advanced tech. Once a low-margin component supplier, it's now a provider of high-value infrared camera systems. The secret? Its proprietary black diamond glass, a domestic alternative to China-controlled germanium. With export restrictions tightening, LightPath's material is in high demand for defense. By acquiring expertise and moving up the value chain, LightPath now sells complete systems, not just parts. This vertical integration means higher prices, better margins, and more control. Its tech powers border surveillance, counter-drone systems, and missile guidance, critical for national security. LightPath is also expanding into industrial uses like gas leak detection. Owning the core material and building full systems gives LightPath a major edge. It's become a vital supplier in industries with massive long-term demand. LightPath's numbers are turning heads. Last quarter, revenue soared 79% to $15.1 million, crushing expectations. Adjusted EBITDA turned positive, a key milestone. The company's backlog hit $90 million, more than 4 times higher than a few quarters ago. Most of this is for new, high-value systems, not old components. Multi-year defense contracts provide stable, predictable revenue. LightPath raised capital to scale up production and meet surging demand. Yet, the market still sees it as a sleepy component maker. Its proprietary glass and vertical integration create a moat competitors can't cross. With a huge backlog and clear growth path, LightPath is flying under the radar. The transformation is real, and the market hasn't caught up. This is a company with momentum and a unique edge. Finally, Duos Technologies Group, ticker DUOT, is tackling the AI data center crunch. As tech giants struggle with grid access and permitting, Duos builds modular, rapidly deployable data centers at the network's edge. These zero-water grid-connected centers can be up in 120 days, far faster than traditional builds. Duos targets underserved markets, smaller cities needing more computing power. Its patented entry system and SOC 2 compliance make these centers attractive to regulated industries. Security and speed are Duos' calling cards. The company aims to deploy 15 centers, starting in Texas, and is expanding its sourcing business to help others navigate supply chain hurdles. Duos isn't just building data centers, it's solving the infrastructure bottleneck for the AI era. Its holistic approach and rapid deployment set it apart. As demand for data explodes, Duos is positioned to capture a critical niche. This is a smart, timely play on the future of digital infrastructure. 3 companies, 3 unique stories, each at the intersection of powerful trends. Allot is redefining cybersecurity, LightPath is a rising star in defense tech, and Duos is solving the data center crunch. Like Palantir once was, these companies are misunderstood and undervalued. The real lesson? Learn to think like a detective. Look for clues others miss. Unique business models, strong management, and exposure to big trends. Read financials, listen to management, and connect the dots. The thrill is in making your own discoveries and acting with conviction. Be curious, keep learning, and dig deeper when you spot a new trend. Ask, who's building the picks and shovels for the next gold rush? Look for companies with a moat and a clear vision. Use Allot, LightPath, and Duos as starting points for your own research. Track their progress, see if they deliver, and learn from the process. Whether you invest or not, you'll become a smarter, more confident investor. The next Palantir is out there, waiting for someone to notice. With curiosity and hard work, you could be the one to find it. Now, get out there and do your homework.